What's good, everybody? Welcome back to another episode of the Beginner's Blueprint. Today is August 7th, day 24. And yes, this video is dropping late. I do apologize. I've been feeling like shit the past couple of days and honestly, just been fucking lazy. So, without further ado, today we are getting into daily bias. However, I don't really like to call it daily bias because even if we're in a bear market, I'll long, and if we're in a long market or if we're in a bull market, I'll short. And I'll explain why in a second. So I'm going to call it draw on liquidity. Okay. So it's okay to have a general bias going into the morning, right? Like say for this example, right? We're clearly in a bear market on the higher time frames, but my objective, I'm not a swing trader, right? So my objective isn't to catch these giant moves overnight. No, my only objective is to catch anywhere from like 20 to 40 points in the market. So I just really focus on where the draw wants to go, anywhere from 9:30 a.m. to 11 a.m., right? That's all I'm really worried about. So that being said, let me show you guys this example real quick, and then we can go over the steps I look for every morning, right? So clearly on the higher time frames, right, we're in a bear market, right? What do? We're in a clear downtrend. What did we just do? We just retraced up into equilibrium, right? We're most likely going to hit that and continue lower. Oh my goodness. But, like I said, my only objective is to find about 20 to 40 points in the market, depending on which way it's going. So, how do I do that every morning? Well, let's see prices chopping around, right? 9:30 opens, let's say, right here. Okay, 9:30 opens right here. I have both sides of the market marked out. So, essentially what I'm looking for is one side to get hit or swept past, and then reverse and go to the other side. That's essentially all I'm looking for every morning. So, if price is in this general area, what do we do first? If we manipulate lower at market open, coming into like London lows, Asian lows, and a 1 hour bullish for value gap, well, then I can look for an entry point or inversion somewhere in this general area, obviously with other confluences mixed through it, right? Like maybe we have an SMT, obviously the hourly bullish for value gap, right? If I want to see this fair value gap get hit, I most likely also want to see a higher time frame SMT along with an internal SMT and an inversion with speed, right? I don't want to see price chopping around. I want to see price hit this fair value gap and then reject it almost instantly. But this is a primary example, right? So say we come down, London lows, Asian lows are swept, but ES only sweeps out London lows, right? So we have an Asian low SMT, and on top of that, NASDAQ tapped into a 1 hour bullish for value gap. Cool. Well, what do we get from that? We get an instant reaction out of the bullish for value gap. Okay. We invert, let's say, a 3-minute gap. Doesn't really matter. And then what can we do? Well, we can target our buy side draws up here. Okay. Or, London highs, Asian highs, this sell side right here. Basically, all this LRL and this 4-hour gap. That can be our draw on liquidity for the next 40 to 100 points, something like that, Now, same thing goes for the other way. Let's delete this. If we're right here in the market, we manipulate higher at market open, again, sweeping past Asian highs, London highs, going into a 4-hour bearish gap. And this is what I mean, you can use your general bias in this situation now, right? Because overall, yeah, we're in a bear market. But again, my only objective is to find the draw on liquidity for those certain amount of points. But let's say we do manipulate higher at open and we tapped into a 4-hour bearish gap. Cool, now we're in a bearish gap, and I was already bearish to begin with, so cool, that gives me more conviction, I guess you can say, to enter this trade. So again, let's say London highs got swept out on ES, but Asian highs didn't. So what? Now we get a Asian high SMT along with a 4-hour bearish gap. We swept also past the London highs, and then what do? Then let's say we invert a 3-minute right now, or a 1-minute. It doesn't matter. Obviously, with speed, we don't want to be chopping around while doing it. We want to hit this gap and reject it almost instantly. But then if we do that, what can we now target? All this shit down here, right? All this LRL, London lows, Asian lows, and then this 1-hour bullish value gap we can also target. Because how does price move? Price just essentially just bounces between high time frame P-Day rays most of the time. So that's all I'm really looking for is high time frame fair value gaps and session liquidity, maybe previous day highs or lows, and then sometimes hourly and 4-hour highs and lows. I look for those mostly just for SMTs. So with that being said, let's get into some notes. Let's write it down real quick. And then I have 2 live examples from this morning and yesterday morning that I can show you guys that I recorded specifically for this video, and then I can also just show you guys a like FX replay example as well. So that being said, let's get into the notes. So step one, dude, I don't know why my computer's hella laggy. What the fuck? Okay, what are we doing for step one? We're starting on the daily time frame and we're marking out our previous day high and previous day low, right? Obviously, if the previous day high and previous day low are like 400 points away, there's no need to mark it. But if we're in that general area of price, then yes, go ahead and mark it out. That could be an area of a liquidity sweep, SMT, reversal, something like that, okay? So heading into step two. Let me move this shit right here. What are we doing for step two? Well, so for step two, after the daily time frame, we're dropping down to the 4 hour and the 1 hour time frames, marking out any unfilled fair value gaps in our general area of price, along with any unswept highs or lows. Okay, so that is step two. Moving on to step three. So step three, previous session highs or lows if they're unswept. So if London session took out Asian highs, no need to mark out Asian highs, etc. Like if pre-market took out Asian lows, if we have an SMT, we can look for that out. But if it already took it out, then don't worry about it. Okay, step four. Step four, we're dropping down to the 15-minute from the hourly, and we are going to do exactly the same thing, right? We're going to look for any unfilled gaps. So for this example right here, say we have a 1 hour bullish gap. Well, most of the time in 1 hour fair value gaps, I don't care if they're bullish or bearish, well, there will also be a 15-minute resting in there somewhere as well. So not only does price want to rebalance the hourly time frame, well, it'll also come and rebalance the 15-minute time frame as well, especially if that fair value gap is either in the 1 hour or, you know, let's say it's just below it. It might wick past the hourly, come down there, and then reverse back up. So we're going to do the same thing on the 15-minute, any internal highs or lows that are unswept and unfilled fair value gaps. So after we get step four, what are we doing? So like I said, we're marking out both sides of the market. So if we manipulate higher at market open, well, we wait for price to hit this area, and then what? Well, step six is literally we wait for price to hit these areas, and then we wait for a reaction with conviction. And you might be, with conviction, what does that mean? Just because price hits this hourly or 4 hour fair value gap doesn't mean we are going to either reject it instantly, or it doesn't mean we're going to reject it at all, right? We never know what the fuck the market's going to do. So we have to have conviction. Just because it hits the fair value gaps and whatnot, sweeps past the liquidity, doesn't mean we're essentially going to get either a retracement or a reversal. So we have to incorporate other aspects, right? Is there also a 15-minute along with a 4 hour hourly? Is there an SMT? Is ES near session highs or lows? Does it maybe want to sweep that out first before going right? We have to build conviction for our trade, but this is how to find the draw, right? So along with building conviction, let's start with step one. we are going to start on the daily time frame. We're going to mark out any previous day highs or previous day lows if they're in our general area of price, right? If they're fucking hundreds of points away, don't worry about it. We can also see if there's possible SMTs with those areas. Step 2, drop down to the higher time frames, which is actually lower than daily, but they're considered our higher time frames. Hourly, 4 hour, same thing. Any unfilled fair value gaps, highs and lows, right? Okay, those are going to be our higher time frame draws and liquidity. Let's move down to our middle time frame, 15 minute, same thing, unfilled fair value gaps. Especially look for the ones that are inside the higher time frame fair value gaps, and then any internal highs or lows on the 15 minute. Okay, step 5, what are we doing? We're waiting for price to hit these areas. I don't care if it hits sell side first. I don't care if it hits buy side first. I'm just waiting for price to hit one of these areas before I do anything. Once price hits these areas, we're going to wait for a reaction. Okay, just because price hits these areas does not mean we're going to enter. No, we are going to wait for a reaction with conviction. And again, how do we get conviction? Well, use ES and NQ, right? Do we have SMTs? Okay, is ES or NQ near these highs or these previous session or high time frame highs or lows? Maybe it wants to sweep that out first and then we can get a reversal, right? Build conviction. Did we inverse a gap with speed, right? If we have a 5 minute fair value gap that we're looking to get inverted, if the inversion happens 6 candles after, right, and price is essentially just chopping around, well then I'm probably going to want to wait for a resweep, and then again look for like liquidity sweeps in there, SMTs in there, and then look for another leg that we can invert any 1 through 5 minute gap on, right? So we want to build conviction before entering. So with that being said, I'm going to show you guys 2 examples. One was from this morning. I'm gonna show that one first. The other one was from yesterday morning, and I'm gonna show you guys that just so you guys get a general idea. Then we'll go through it together on here. I look tired as fuck this morning. Don't judge me, okay? Let's get right into it. Anyways, okay, look right here. Say this is market open in this general area, right? Let's say we move and we're market open. Okay, what do we have? Like on the higher time frame, we're in a downtrend and we're retracing, probably going to continue the downtrend. I don't really care about that, right? In this leg, we're in the uptrend on like the lower time frames. Hourly, we're clearly in an uptrend. But I don't care about that. Why? Because I'm just trying to find where the draw liquidity wants to go. I don't need these big ass moves, okay? So price can do one of 2 things in this situation. So what do we have on the buy side? We have this unfilled bearish 4 hour fair value gap. And then there's another one above it, right? There's another one right here that we're actually in. And what is below us? Well, we have a bullish 4 hour fair value gap. We have another bullish 4 hour fair value gap. And we have another one. So obviously this is just the basics, right? I haven't even looked at the 1 hour. I haven't even looked at the 15. But this is just a general idea of what I'm looking for every morning. This is happening live right now. So what are we doing right now? Well, I just talked about this video in the video. Well, I made it right now, but a couple days ago once this video comes out. What are we doing? We're accumulating, right? So if we manipulate higher, where's my brush? Dude, my brush was just here. Oh my God. Where's my brush, bro? Here we go. All right, look, if we manipulate higher into this 4 hour bearish fair value gap, then I'll be looking for shorts targeting this one. Or obviously if we leave like an unfilled 15 minute right here, then I'll use that unfilled 15 minute as a take profit. But that's generally like what I'm looking for. And then same thing goes the other way. So this is what I'm saying, like I don't really give a fuck about which way the market's going. I'm just trying to find the draw and liquidity, right? We have an accumulation zone. What if we do this? What if we go lower first? Oh my God, then I'm looking for a fucking inversion out of it. And I'm targeting this 4 hour fair value gap up here. So this example I just showed you guys is literally what I'm talking about in this drawing. It's the exact same thing. Higher time frame, right? We're in a downtrend. What are we doing? We're retracing, right? On the higher time frames, yeah, we're probably most likely going to come into this bearish fair value gap and continue lower. But again, we're only looking for small draws on liquidity. So if we come down here, sweep out this bullish gap, then I can target this because on the higher time frames, this is probably most likely going to want to get hit before continuing lower. Now, if this gets hit first, well, boom. Now this matches up with our higher time frame narrative, so that's more conviction. And we can look for a rejection out of it and either target the lows of the sessions, intermediate lows, right? Unfilled 15-minute gaps, some maybe in the leg up. Or we can just hold it all the way down to this bullish gap, depending on how price is moving. So that was example 1. Let's jump into example 2. All right, you guys, look, this is another example of my draw on liquidity, right? So if we inverse this bearish 4-hour gap right here, what can we expect? There's another bearish unfilled right here as well, right? So if we inverse this and then this 4-hour opens up right here, right? We can then expect something to look like this, right? Say we inversed it, we come down, and then we can go straight towards that. Now, if we hit this first, right? If we hit this bearish gap first and leave this bearish gap unfilled, or bullish gap unfilled, then what can we expect? Well, then we can expect something like this. See how I'm only playing a certain like range? I don't care about the entire fucking move. I'm literally only playing about maybe like a 60, 70 point range. 6, 7. It's about 130. Okay. So, which is normal, right? If we rip up towards this bearish gap first, we can expect some sort of retracement, because how do we know how price moves? Well, price moves like this, and that's exactly what will be happening, right? We'll go up, down, and then we can continue up if that is the trend. Or if we come down first right here into this gap, say there's a gap work, then we can take the long towards this unfilled gap up here, especially if this one gets inverse. So that's essentially how I find my draw on liquidity. Here is another live example. As you guys can see, it's 9:29 in the morning. I'm about to jump on the chart. That video cracks me up. I just look so exhausted. But as you guys can see, I'm literally showing you guys live every morning. Like, that's all I'm really looking for. And I have a 72% win rate, and I'm about to take a 10K payout tomorrow after I hit another $150 on Top Step. So it fucking works, right? It's not like I'm just saying bullshit. So that being said, if you guys have any questions, feel free to either comment or DM me on my Discord, DM me on my TikTok, DM me on my Instagram. Really doesn't matter. Please get at me so I can help you guys. My only objective, again, is to help you guys. If you guys enjoyed the video, want to stay, want to see future videos like this, go ahead, drop a subscription. Other than that, follow me on TikTok. Fuck my TikTok for real. LoeGpa. Anyways, I'm out. Hope you guys have a good day. There will be a psychology video tomorrow. And then our strategy. Okay, adios.